I think it's an interesting call because I feel like Citigroup for so long has really been the laggard, at least among the big banks here in the U.S. here. What's changed? And I assume it might revolve around a certain CEO.
Well, I would say J.P. Morgan was my top bank pick for last year, and this is a pivot.
And that was a good call.
But now let's go to Citigroup as my top three picks for 2024 are Citigroup, Citigroup, and Citigroup.
Oh. Okay, all right.
And you could either consider Citigroup a three-ring circus, or you could view it as three connecting circles, like a three-circle Venn diagram. And I choose the latter. The first circle is their org simplification. They're delayering management from 13 layers. 13. Yeah. From the bottom to the top CEO down to 8. They're eliminating 2 intercompany lines of business. They are organizing along 5 lines of business, and that's it. Do away with so much matrix management. That's kind of ring number 1. Ring number 2 would be their transformation, where they're finally modernizing their back office technology, and some of this is regulatory driven, but it's stuff that other banks are doing. And the third ring are these business exits. They're retreating from 14 non-U.S. consumer markets and some other businesses. So you take these 3 circles together, and you have the biggest restructuring at Citigroup in modern history. So the question is, does it turn out good or bad? And I'm saying it turns out well enough for this stock to double over the next 3 years.
Well, that's what I want to talk about, because I mean, we kind of know what Jane Fraser's been trying to do. This is going to be, I guess, a somewhat slimmed down company, or at least slimmer than what it was here. Does that automatically translate into better profitability?
I think the bottom line is that Citigroup is becoming a much more simple and profitable firm whose earnings should double over the next 3 years. But this is make or break time for Jane Fraser. You said, is this due to Jane Fraser? Maybe. I think so. But not definitely. I mean, to some degree, the feedback from investors has been for the last year, Citigroup's blown up the profit and loss statement due to expenses that are out of control. My view is they're ripping the guts out of the company, reconstructing it, and that costs money. But those expenses then start going down. And they've already guided expenses to go lower in 2024 and for 2025. So I think this is a combination of a much more optimized, streamlined, efficient firm and that'll drive returns much higher. That should drive the stock price higher.